That is super annoying. Stupid hotel internet. Another reason I'm tired of traveling and I want to go home and have a home base. I need to have a place set up. It would be really, sorry about that, guys. So we were midstream and the internet just crashed. I don't even know what happened. It like just disconnected entirely. I can't get back into that stream. It's still live somehow. I can see it playing live on my YouTube and people are still in there watching it. So you'll probably get this notification in a second and then switch over to this stream. So for those who are watching this, sorry, the stream crashed. Back to what we were talking about. We're talking about fear, uncertainty, and doubt in the stock market right now. We're talking about, the three things of the FUD that's driving all of economic decisions related to real estate, stock market, business, whatever you're invested in, crypto. Of course, World War III is number one thing that people are afraid of right now. Is the Russian forces invade Ukraine. Will the U.S. step in? Will NATO do something? Will China, the ally of Russia, move into Taiwan? Who knows? A whole bunch of fear, uncertainty, and doubt. Economic ramifications of the sanctions, et cetera, so forth. The highest inflation rate in the last 30 years. Since the late 80s, we haven't seen inflation this high. So that's a huge issue that Jerome Powell and the Fed needs to deal with. Again, in Canada, same thing. Bank of Canada today, by the way, just hiked interest rates for the first time in, I think it's been almost 2 years. So that's a huge announcement. It is going to push real estate prices higher. It will suppress growth stocks. It will suppress dividend stocks. It will suppress a lot of things. Not really great for the economy, but it will force inflation down. They will have to keep tapering, and that means stop spending and increase interest rates. That's painful. In the short term, it's really good for the real estate market because people all have 120-day rate holds on their fixed rate mortgages in Canada, and they will try to buy something. So there'll be more demand than meets supply, and so there'll be a collision. Which will force prices to a peak, and then it will crash in Canada. And by crash, I could mean just no growth at all. It could be flat. Historical rates of growth I've talked about in this channel a million times, and right now we're talking 8 and 10% month over month in London, Ontario, Canada, growth. We're talking like annualized, 100% annualized growth. Like houses are doubling in price in a year's time. That's not the case in many markets though. Like in the Bahamas, prices are down. Costa Rica, prices are down. Many states in the United States, prices are flat. Prices are not growing like this, right? So my market is a unicorn. I've now sold off most of my assets there real estate wise. I'm working towards that as I work towards my relocation plan. By the way, if you were in the other chat, people are probably still in the other chat. Can someone jump in the other chat, the other live stream, and just say, hey, Mike's got another stream going, can't get back into the old one? That would be helpful, just to let people know, to bring their questions. There was like 20 questions I was supposed to have answered in the other stream. And unfortunately, I can't see those now, so I have no way to answer them. But one of the things we're talking about too is, why relocating to the Bahamas seems to make the most sense. It might not for you. Each person is different. I don't even know if we're live right now. It says, experiencing interruptions, YouTube says. Stupid hotel internet. All right, guys, I'm sorry. This might just be a dud. We might just have like a shitty stream tonight. I don't know. Hotel internet, it is what it is. I wish I could give you guys better, but I don't even see any comments below. Sometimes my stream will freeze up and I can't even see the comments in the stream. So I'll give you guys another 5 minutes of chatting and see if anything pops up. I can't see any comments, anything popping up quite yet, but keep throwing them in the comments and maybe it'll not lag out and I'll be able to see you guys. All the questions in the other stream, I wish I had them to go off and riff off right now, but I'm sorry if you put those questions in. Okay, people can hear me, that's good. I just saw something pop up so people can hear you. Okay, so there are some stuff popping up in here. Varun says, hey Mike, I see the beard's growing again. Hope that doesn't mean margin calls are back. No, so no, I just enjoy having the beard, it's, I don't know. It's just kind of nice to just have a little bit. I keep it super trim. I don't let it get too long. But I've just been enjoying, just letting the hair grow long too. I almost have a long enough hair to do a pony or something, or do like a surfer dude look. So yeah. But sorry about the other stream crashing, guys. If you have any questions, pop them in now. I'll give you guys another 10 minutes to answer any questions you have, what's going on with me, and if I can help, happy to do that. It's the world right now is just a crazy, crazy place, and there's a lot of uncertainty. I'm thankful for diversification. Um, for instance, this guy is living the Florida man life. I have no boss. This channel's not even really, I mean, it's monetized, but I don't monetize any of these live streams, so the only residuals I get are from videos I made forever ago. So it's, by the way, guys, if you're watching this, check out the video I did last week, the live stream we did in the Bahamas. 5,900 views. 5,900 views already in a week. It's been exactly 1 week now. It started to pick up about 3 days ago. It went from like 3,000 views to like 6,000 views really quick. So it's making its rounds in the Bahamas. I'm a local talk of the town, I guess, probably on some of the islands. I noticed there was a gap in quality content on YouTube in general. So there's a huge gap there for those people who are digital content creators and whatnot, to create that utopian sort of vibe and get some of that, you know, Canadian and US and European capital to invest in the Bahamas and transform it, because it's a beautiful paradise. Some of the nicest water I've ever seen. One of the best crypto climates that exists. You know, Sam Bankman-Fried just relocated there with his company FTX. He's the second richest. He's the richest he's the youngest richest person in the world right now. He has $29 billion dollars, and he went from nothing to that in 3 years. So super ultra rich guy, like 4 times the GDP of the Bahamas. Super impressive. Has relocated to the Bahamas and Nassau in the capital, and his company has been brought there, and they're putting on an annual conference now. And Miami, which is just 60 miles away from the closest island in the Bahamas, 60 miles away, is now becoming the crypto.com crypto hub. So we're talking about creating sort of a triangle of, you know, crypto influence and conference, and with a tax law that's really favorable. There is none. As in, whatever you make, you pay nothing from a crypto tax perspective, from an income tax perspective, from a capital gains perspective, from a passive income perspective. There is tax, you know, you pay tax when you buy goods and services there, and that's how they raise their revenue. And when you do real estate transactions, there's a stamp tax, and when you do a whole bunch of stuff, there's taxes with that as you do stuff for goods and services. But there's nothing on income, which is great because it scales super well. You could buy a $500,000 house, pay the tax once, and pay no more tax, right? You don't even property taxes in the Bahamas, in Freeport specifically, the area I like. And the people are amazing, and there's so much opportunity there, so I'm hugely bullish. Will you continue to buy real estate in Florida, or are you putting a pause on real estate acquisitions for a while? So Warren, I'm actively looking for the right properties to acquire. I'm throwing out offers all the time. In Florida, yes. I think that Florida is a more interesting investment climate than Canada is right now. That said, if the right opportunity came around in Canada, my corp would take it on. Personally, I'm looking to divest all of my assets in Canada. I will set up Bahama corporations. I'll probably do some more digital and media stuff. I think that'd be a really cool pivot. The Bahamas allows you to sell, for instance, there's a treaty or sort of an understanding, I guess, where you can sell, like if you're a writer or a musician or a content creator, you can sell your music and get royalties in the Bahamas and sell in Canada and not be taxed in Canada. There's no tax. And there's no withholding tax for foreigners. Whereas if you invest in real estate in Canada, from the Bahamas, there'll be a withholding tax on your rent and on your capital gains. You're still going to pay some tax. Same with stocks. If you buy stocks from the Bahamas, there is some withholding tax that exists. There are ways to optimize and structure that, and it's better from the Bahamas than from Canada, but still some tax. There are ways to do things where you can invest and not pay tax, and the Bahamas is really interesting for that purpose. Puerto Rico, I think, has a better tax provisions for traders, as an example, than the Bahamas, but the Bahamas has way cheaper real estate, a better lifestyle, way closer to the first world, and not experiencing so many hurricanes and earthquakes, and just not to the same severity, at least. In some of the areas protected by the coral reef, there are houses that have stood for many, many years, relatively, unimpacted. So that's interesting. That there are the right places where you can invest, and there's always hurricane insurance, I guess, either way, but I like that the Bahamas is English primarily as well, because Puerto Rico is very Spanish. So it makes it a little bit more difficult for someone who doesn't speak it. I'd have to learn the language. Brandon, favorite ride Disney? I don't know. What was it? My daughter and I loved that little roller coaster. It was like Space Mountain or something. or no, Thunder Mountain. She enjoyed that, and I enjoyed that too. We did that at night, so it was super dark and it was exciting. We didn't even know what was happening. We were just getting thrown around. So that was super fun to be her roller coaster buddy. And do you think real estate prices in Canada, like Vancouver, will continue to rise despite the rate hikes? A big factor is the 400,000 new immigrants coming. Yeah, I mean, on one hand, Canada is ripe for a supply-demand crisis. So they continue to immigrate, and that is the only thing growing the Canadian economy. Majority of the growth in Canada right now is real estate related. So in some way, the construction or something related to real estate right now. That said, Canada has a lot of red tape, makes it very, very hard for people to build and develop. And it takes years and years and years to build and develop as they continue to immigrate more people than they have houses for. So that creates a shortage that basically forces up prices to levels that are not sustainable. So if they ever stopped immigrating people, or made the climate unfavorable and people were to emigrate from Canada, there would be a real crisis. At the moment, immigration is Canada's growth plan. So will rising interest rates drive prices down? Yes, for sure. It'll definitely stop the speculators in the long term. In the short term, it'll push prices higher because people have rate holds for 120 days. So in the short term, prices will continue to spike. In the long term, they'll go flat or negative. That said, that negative pressure of lower interest rates, unaffordability, a number of other negative things that are happening in the economy and the world, the bad tax climate in Canada is offset, I guess, by the tons of immigrants that they're letting in. So, yeah. I don't know what's going to happen in Vancouver. Vancouver's been unaffordable for a long time and continues to rise. A lot of people have money, and they don't mind paying a premium to live where they want to live, and they don't mind paying the tax, I guess, as well in Canada. So, or they're not rich enough to pay enough tax that matters. Food for thought. Ali says, I've moved to Canada recently as a new immigrant. Do you think it's a good decision to move here in these current times? Also, do you think it's a good country to build wealth? Ali, Canada's a fantastic country, especially as someone who doesn't have a lot of wealth. Like, if you're coming with not a lot, Canada offers a lot of great social programs, free healthcare, a ton of economic opportunities. If you want to work in Canada, there's a job for you. Canada, you hear people talking about unemployment in Canada, lazy people. I know so many entrepreneurs who can't find good workers. Like, nobody wants to fill the jobs. There's a huge great resignation going on of millennials and youth. They're like, I'm just going to work online, remotely, for myself. I don't want to work for an 8 to 5, whatever. So there's a whole bunch of people that don't want to work in Canada. And then there's the whole group of people, I have people like that in my own family, who just want to collect welfare and chill. And the system's paying them like $2,000 a month to do nothing. It's shitty because they're not producing anything for the economy, and they're just net social drags on everyone, including the whole system. So those people are, I would call them leeches. Not ideal. There's a lot of those in Canada. I don't know. On balance of probabilities, I would say that you have a good chance of building wealth in Canada. In real estate right now, the only way to build wealth is to have wealth or get into wholesaling or assigning property. That's very, very common in Canada. Everyone and their brother is buying properties and trying to assign them. It's fully legal. You can definitely do it. But yeah, I mean, there's risks obviously with that. And I know people who have tried wholesaling and they wasted 3 months of their time and made nothing. So I don't know. It depends on where you're at in your journey. You could make money in Canada for sure. It's a decent country, and if you don't make a lot of money, I consider less than $100,000 a year not a lot of money. So if you make less than $100,000 a year, then Canada's favorable. And for a long time, Canada was favorable for me too. It's only now that I'm starting to reach my aspirations and my goals, I'm starting to reach those levels where Canada's not going to make sense for me long term. It still makes sense, now. It has made good sense to me. The primary residence tax exemption for capital gains is amazing, especially with these real estate prices. I've made $1 million or $2 million just holding property over these years. I know people who bought houses in Toronto for $1 million and sold it for $5 million, and they made that $4 million gap fully tax-free in Canada. There's no tax on your primary residence. People just bought and held for 6 years, and that's it. So, I mean, Canada does have some tax loopholes, and it's not the worst by far. It's a relatively nice country. It's gotten worse for sure, but it's still great. The winters kind of suck, if I'm being honest. It's kind of cold. Maybe not in Vancouver, but in Ontario for sure. Have you ever done a refinance on a property where you put less than 20%? Could you share your experience? The only way you can get less than 20% on a refinance is by tricking or convincing the appraiser to give you a valuation that's higher than the current value. In which case you go 80% loan to value on that. You can't refinance. Like if you bought a property 5% down, if you go and refinance, it has to be 80% loan to value on the refinance. So a lot of times people buy a house 5% down and then go and refinance it, and they just wasted the fees they paid to put 5% down. It's a 4% fee. So you lose almost your entire 5% down payment when you buy a 5% down. There's a CMHC insurance fee that's a one-time upfront fee. So if you keep the 5% down and the properties don't appreciate in value and you don't add value to it, the 5% down play, it makes sense. Otherwise, like if you're gonna refinance, the 5% down play is not, it's really expensive. It's cheaper to go to a loan shark and pay 20% annualized interest than it is to do the 5% down program in Canada. Unlike in the US, where you refinance and you pay like a monthly private mortgage insurance, or sorry, PMI is what they call it. Anyway, so I lost my train of thought. I'll just bang up some questions here real quick. Hey Omega, good to see you on. Amoba says, hey, do you use up all your cash for trading, or do you follow the 1% to 2% per trade rule? I don't know what the 1% to 2% per trade rule is, but I try to diversify. So I don't put any more than like 3 to 4% in the one position. So I have many positions open. I don't go all into one company. And when I do, I always regret it. There's times where I put like 10 or 15% of my portfolio into one company, and I always regret that trade. So diversification is the most important rule. Try to avoid margin. In times like right now, I'm actually avoiding using margin on my, it sucks because Interactive Brokers is like almost free margin. They give you can borrow against your stock portfolio 70% loan to value. So you can have $1 million stock portfolio and borrow $700,000 against it to buy more stocks or do whatever. You can actually take the cash out if you want and buy a house. You can have $1 million in stocks at Interactive Brokers, take out $700,000 and buy a property, and still have $1 million in stocks. They'll lend against it at prime minus 1.5%. That's a pro tip. A lot of people didn't know that. I didn't even know that until 2 years ago. It's like revolutionized my brain. I was like, wait, you can borrow below bank prime, cheaper than against real estate. You can borrow against stocks, cheaper than you can borrow against real estate. That's a fact. You 100% can. But anyway, I still have a little bit of margin. I like to deploy the margin because it's leverage makes good trades, great trades. It makes good dividend payments, amazing dividend payments. If you're buying a 5% buy and hold dividend stock, you leave lots of room on your margin account. You don't use the whole margin available. You use like half of what you have available. So if the stock dips, you don't get margin called. Be very, very careful. If you're going to use lots of your margin, make sure you buy hedges and insurance. If you own the shares, buy puts to protect yourself, or you got to protect your equity. Lots of ways to do that. You can do that through calls or through puts, but puts are probably the preferred way to do that. Withholding tax is less, though, than the citizens living in Canada or the US, right? Yes, correct. And it's way easier, too. The 15% withholding tax on, say, a US equity is way better than having to do all the math to calculate exactly what your adjusted cost base is and whatever. And basically, you'd have to figure out and file a tax return and then pay what you owe, which in many cases, if you're an active trader, could be worse than the 15% withholding tax. So yes, the withholding tax is more favorable in my opinion. Yes, it's still better. I think that there are other ways and other businesses you can invest in. If you're like a digital entrepreneur, or you have businesses or real estate in the Bahamas, et cetera, and so forth, the Bahamas is very tax advantaged. You can pay almost no tax. You do have to shift your assets. Like I'm probably going to shift my stock portfolio into a crypto portfolio because crypto has no tax. And can't be frozen, it can't be touched. That's the goal, right? Is to have full control. So that's probably what I don't know. We'll see. That's probably what I'll do. Is shift from equity. I don't know. We'll see. Maybe go half. I like the diversification and the. I just feel better about having all these asset classes and exposures to different markets. And I think that despite the taxes involved with owning those North American equities, it's nice to have that exposure. Hong Kong Fui says, I'm 28, working and living in a medium cost of living area. Given that housing has increased so much, should I buy now and house hack or continue to rent? I have roommates, so I live pretty cheap. Probably the smartest thing is to keep that place that you have and buy a house and then call it your primary residence, get all that appreciation. But I would wait. I think, to be honest, I think now is not the right time to buy. Could it get crazier? Yes. Will it correct from the current price? I believe so. Especially with rising interest rates, I think the best time to wait is wait and see how many interest rate hikes we get. For sure, we've had one now. More are coming. That has implications, for sure. Let's see. What income will it make sense to move out of Canada? You know, I think that Canada makes the most sense if you're retiring and you can build a portfolio under 100,000 as a couple. So $50,000 a person, you can collect a dividend income or TFSA, maybe 120,000 because you can use your TFSAs to shelter some income as well. I think that as a couple, $50,000 a person, $100,000 together, or less, if you can live on that and retire on that, and that's your income goal, then Canada's a great place to be because you got free healthcare, tons of social services. It's a very relatively safe country. The advantages of moving, it's a lot to relocate your life and move. So you don't get that many advantages. That said, if you're doing private lending in Canada right now, interest income in Canada is taxed at the top marginal bracket in your corp of 55%. It's also taxed in your hands at whatever your marginal tax rate is, the top marginal tax rate. So that's, passive income is not a great thing to collect in Canada. So if you're doing private lending, again, Canada's shit. It's the worst. Like $100,000 in private lending income is horrible from a tax perspective. But if you had a stock portfolio and you're collecting dividends, that's different. If you have an active business in Canada, you can structure up to $500,000 per corporation. Each spouse could be on a corporation, and you can shelter all that. So there's definitely ways you can make Canada work, but I don't know. I think that just for me it doesn't make sense, and there's a lot of people like me who are just tired of it. But you could optimize. I guess you could stay in Canada and optimize. Eventually, most people who are wealthy would be better off moving, but some people choose to stay and just deal. What is your prediction on oil prices, Mike? I think they will continue to go higher. Long term, I'm bearish on oil prices. So short term, I'm bullish. Long term, I'm bearish. Mid-term, I'm neutral. No, I'm still bullish, even in the midterm. He lives in the U.S. Do you want to buy a condo in the Dominican? Honestly, why the Dominican? It's further away. It's a less favorable economic climate. The tax, I don't know. I just didn't. The Dominican didn't make it on my list, but for sure you can do that. Definitely, I would say meet with lots of different realtors. Don't pick just one. That's the dumbest thing you can do. Meet with 3 or 4 or 5 realtors. Find the one you like the most. Each realtor will give you a different flavor and a different story, and then commit to one, obviously. And when you go to buy something, you've seen a little bit from each realtor, and you've heard the different sides of the same coin, same sides, the different sides of the dice, to understand the full picture. Do your due diligence, and a big piece of that is seeing lots of property there, seeing everything that's on the market. So take a trip that's just for work. That's why, in the Bahamas, that's what I did. It was a work trip, basically. Work trip, it was vacation, but I was actively learning and researching about the Bahamas so I can learn whether or not I want to move there. And so I considered it a research trip. The same is true for you. If you're going to go to Dominican, you should do that too. Have bull put spreads been profitable? Yes, extremely profitable. Where I haven't been profitable is where I acquired the equities. I didn't do a spread, I did a naked put, and I got acquired on the equity, and the equity tanked. Or where I bought equities, and then they subsequently tanked. And we're in a market right now, we're in the last 2 months. January and February were the worst months for growth in tech, especially for my portfolio that was heavy growth in tech. I got crushed. So it was like trying to catch a falling knife. It was not good. It was not good at all. I will say that all of the trades that I had capped losses on that closed out were profitable. And my portfolio continues to grow 1 to 2% a month, but I'll have the odd setback where like I put 10% of my portfolio in Facebook and PayPal, and they're down like 40%, right? So that offset all of the great trades that I had. It's okay because Facebook's going to come back, PayPal's going to come back. These are quality names that are going to be here for a long time. I'm extremely bullish about that. Ugh. Cool, Manny. You should also check out some other places too, just to make sure that it's the right one. There are so many options and so many islands and so many places you can visit. I still have a trip yet to Puerto Rico to check out there as well. The crime is a real issue in Puerto Rico. There's a number of issues that are. The island of Freeport had very little violent crime. People there were very nice. It needed investment, but there was a lot of opportunity, and that was something that called out to me about the Bahamas. That on Nassau there's more violent crime and stuff like that in the wrong areas, but the good areas are fine. But I didn't. I prefer Freeport myself when I did my research. But yeah. Where's the source for the story of the lawyer with 6 kids that quit to move child benefits that you mentioned a few streams ago? So yeah, there's I don't know, there's several stories that pop up like this. I shared one that was on my Instagram stories a couple weeks ago that was a great one. It was an immigrant family that moved here, and they had 7 kids. And the guy, I think he drove taxi for cash or something. I don't know. I think he claimed like $30,000 a year on the books, and probably making more off the books. But literally had no incentive to make more than $30,000 a year. Because after $30,000, they start clawing back the Canada Child Benefit. But 7 children, and they're making $4,400 a month after tax, plus the Ontario benefit, and the assistance for just moving here as immigrants. They're getting around $5,500 a month cash every month. And after tax, if you compare that to a lawyer, the average lawyer is making like 90, 100 grand a year. After tax, after CBP, EI deductions, federal tax, provincial tax, health tax, you're looking at a little bit less. So if you were a lawyer who had 6 or 7 kids, it is better to quit your job and sit at home and play World of Warcraft or be with your kids or whatever than it is to work. Because the clawback for a lawyer with 6 or 7 kids, it effectively makes their tax rate about 75%, 80%. So it makes almost no sense to work as a doctor or a lawyer if you have a lot of kids. It makes no sense to work at all if you have a lot of kids in Canada. I unfortunately make too much. But the Canada Child Benefit, even for 3 kids, is like, I think if I could keep my income below $30,000, which I couldn't, like, there's no way. But let's just say I could. If I could keep family income below $30,000, I think we get like almost $2,000 a month. That's after tax cash deposited monthly. That's mental that Canada is like that. For people with lots of kids, it's a great place to be. But yeah, I don't know. Unfortunately, I'm blessed, right? Like my original plan incorporated, the benefits of the Canada Child Benefit. Unfortunately, I won't be able to receive it, especially this year. Like I get 0 of the benefit this past year because my tax return will be not the 2020 returns that calculates the 2021 year. It really sucks. Anyway. How do you get second mortgages on properties? Why don't you just get second mortgages secured on properties you own? You could. It would crush any cash flow, so you would have no cash flow because you're paying a first mortgage and a really expensive second mortgage. On top of that, most of the e-lender first mortgages have stipulations that you can't have a second mortgage. They allow no one to be subservient to them. They want the property title to be free and clear except for the first mortgage. So a lot of the mortgage terms from the big banks don't allow for a second. That's one challenge. The other challenge is like not a lot of lenders want to go there. So you could, I guess, just do that and keep the properties. But then you have to file the tax returns. You're talking about negative cash flow on a monthly basis. And it's a lot of headaches. Like owning property, if you're wealthy, you don't want to own small property. You want to own big buildings that you can outsource everything. That makes sense. Small properties don't make sense. There's just a lot of headaches. A lot of just dealing with crap. It's just the managers and it's a lot of time investment. So if you value your time, it doesn't make sense. Mike, what if you own private physics business here in Canada? Is the Bahamas for them at all? Any benefit? Not just real estate. Yeah, of course. Like many companies, many multinational companies and pharmaceuticals, etc., headquarter in the Bahamas. It's a offshore banking mecca of people collecting. So yeah, many people will set up operations and hire people. And by the way, labor is cheap there too, so you could get affordable staff to do things for cheaper than in Canada. So your operational costs of moving your company to the Bahamas, everything's cheaper. You can find cheap rent, cheap staff, etc., so forth. Hydro is more expensive there, interestingly. So solar is a great thing to invest in the Bahamas because their hydro rates, it's a Canadian-owned company, interestingly, that sells the hydro in the Bahamas, but they're charging them 500%. of the price of hydro at home. So that's wild. Solar is 5 times more profitable in the Bahamas then, therefore. But yeah, you can move your company and do business, headquartered in the Bahamas and do business elsewhere around the world. And yeah, that'd be way better. Even still, I'm not a tax expert, so talk to a tax expert. Each situation is different, but I believe you could set up a Bahamas corporation and invoice your Canadian corp and effectively consult and move profits to offshore tax-free haven in that corp. Whereas here you can get a deduction now and bring the tax bill to almost zero because you bled the profit out with expenses over to the Bahamas corp. So there's some really interesting stuff. Even if you don't move to the Bahamas, where you can set up Bahamas offshore banking, it's like the Caymans in a lot of ways, right? Their number one industry is tourism, but their number two is finance and offshore banking. That's their number two industry. And with tourism being down, it might even be their number one industry right now. So the country's going to protect that. That's why they've written the laws in favor of entrepreneurs to come to the Bahamas and invest their capital and hire people there. Because when you bring your business there to save on tax, you inadvertently help the Bahamas economy. They're like, hey, we're not getting taxed from you, but we get registration fees in your corp. We get, the lawyers make money, the banking sector makes money, all the people working in your business there make money. It's good for their economy. And it trickles down. As you hire staff, there'll be some payroll tax, I'm sure, et cetera, a little bit of stuff, right? Like, they're going to make money still. Christopher, you talked to an attorney there, but it seems relatively easy from the people I've talked to who have set up stuff there. It's an attorney could guide you through for 10 or 20 grand. I'm sure you could get something set up. Maybe more, I don't know. Depends on how complex your corporate structure is, how many employees, and what size your company is. It could be more. I'm sure that multinationals spend millions moving over their companies, but they also have hundreds of thousands of employees and stuff. So, is it better to claim maintenance and repair on taxes for rental or capital expenditure? It's always better to claim maintenance and repair, but you're unable to claim maintenance and repair if it is a capital expenditure in nature. So talk to your accountant, and they will help you decide how those expenses should be categorized. You can take capital expenditures in Canada and depreciate them against the building, but when you go to sell the building, you have to recapture that said depreciation. Again, talk to an accountant. But yeah, it's a bit of a complicated formula, but an accountant would have an easy time with it. Andre says, hi Mike, what's your take on variable rate mortgages versus fixed rate mortgages? What can you say one is better than the other? So in the last 5-10 years, variable rate mortgages have won out every single time versus fixed. That said, some lenders like to do fixed mortgages versus variable rate mortgages. And so the difference between the variable rate and the fixed rate needs to be substantial enough that the variable rate makes sense. In my case, on my house, I had a mortgage at 1.26% 5-year variable. The fixed rate I was offered was 2%. So there's a 0.75% difference between the fixed rate and the variable. It was more than that. Actually, a whole 1%. There's a whole 1% difference between the variable rate and the fixed rate. So if rate hikes are less than 4 hikes this year, I win out on the variable. I don't think there'll be 4 hikes this year alone. And for the first year I had the variable rate mortgage, there was no hikes at all. So I've been enjoying a cheaper rate this whole time. Even if rates go up 5 times, there's 5 rate hikes, I still come out ahead on the variable rate mortgage. So on another side note, I think if you ever choose to sell the property or refinance the property, breaking out of a variable rate mortgage on a sale or on a refinance, there's huge penalties on a fixed rate mortgage. There aren't on a variable rate mortgage. You pay 3 months interest, that's it. The fixed rate mortgage can be deadly, especially if rates have gone down since you borrowed. I had mortgages I took out at 3.5%, 4%, because like rates used to be a lot higher, right? And now they're like 2%. And I broke out on some of my properties that I sold. I think I had breakout fees in the 6 figures. I paid $100,000 in breakout fees to sell a property, or I guess a few properties. Cool trick, you can pay down the property with a prepayment penalty 20% per year plus double up your payments if you know you're selling the property. So I knew I was selling in, say, January, and you go 2 calendar years. On December 30th, you could put 20% down on the mortgage, and then January 1st, you can put another 20% down. You just pay down the mortgage 40%. You've reduced your breakout penalty by over 40% right there. So a great way to make in some cases, 20% annualized return by prepaying down the mortgage before you sell or refinance. Before every refinance, I've always done this. Before sales, I always do this too. It's a great way to reduce the fees. But yeah, fixed rates, horrible for fees. What net worth would you consider yourself to be FI if you're living in Canada? I mean, each person is different and there's no right answer. A safe conservative rule, and I think 4%, this 4% rule is super, super conservative. I think a 4% net of inflation return is not that great. But the 4% rule would dictate that you take your annual expenditures that you plan to spend in retirement, add up all your expenses that you need to live, and take that number, that annualized number, and multiply it by 25. That'll give you the number you need to reach financial independence. So if you're spending 100 grand a year, you need $2.5 million to retire safely and comfortably to not have to touch the principal. So you can leave the principal there, let it grow with inflation, and it will provide you enough that you can withdraw 4% from that portfolio for life. So $2.5 million at a 4% safe withdrawal rate, you're retired. If you need $200,000 to live for your family, you got lavish goals, then you need $5 million, right? If you need $400,000 a year, and would be an after-tax number too. So the $100,000 goal on $2.5 million is pretty easy because you could just do dividends and pay no tax at all. So there's no tax consequences at all to consider. But if you need a luxe lifestyle and you want like $400,000 a year, you're going to be paying like 30-40% tax rate on that. So you really need to add 30-40% padding to that number to be considered financially independent. I've heard people now argue the 3% rule with the current inflation rate environment is more achievable. So a 3% rule would require that you'd have to multiply that number, that annual expenditure number, by 33 and a half. So might need a little bit more to be considered financially independent. So yeah, I've been financially independent now for 5 years. I quit my job at the end of 2016. Maybe I didn't give notice till the start of 2017, but I quit around around February. I actually got laid off and collected a little benefit there. That was it's a story for another day. But I followed the Financial Samurai. He has a great book and a great number of episodes about how to exit from the corporate world, and I followed that stuff to a T, and I played it up, and it was fantastic. It was a great exit, and I've now been gone over 5 years. I haven't had a corporate job in over 5 years. I've been retired, and my net worth just gone. So people who are worried that quitting their job, they're going to be worse off. If you're the type of person who's like me, who's a type A, and you have business passion, and you're probably going to do something with that time that you get freed up, you're going to be fine. You're going to grow, and you're going to be fine. If you give us one advice on how to be wealthy and reach financial independence, what would it be? Work hard. You know what? I'm gonna wrap this stream up. I'm gonna give you this. If I missed your question, hit me up on Instagram, Mike Rosehart, or leave me a comment. I'll try to catch you on the comments. It'll be this: spend less, earn more, and maximize returns on the difference. Sorry about the Wi-Fi, guys, if it's cutting off. You start your journey. What you spend is the most important thing. Once you're on the journey and you've built some net worth, then what you spend means almost nothing. If your passive income is 6 figures or your active income is multiple 6 figures, don't focus on the frugality piece. That's not going to move the needle for you. Unless you're spending all of that $200,000 if you're making 200 grand a year and you're spending 200 grand a year, you're broke. You're making $1 million a year, you spend $1 million a year, you're broke. You got to work on frugality. But if for the average person who's already tightened the purse strings a bit, they're making a great income, they're already saving a good portion of their income, don't spend your time on the frugality piece. Spend it on ways to make more income and how to maximize the wealth that you have. At my stage, a 1% return in net worth has more impact than anything I can make with my active time and anything I can spend by focusing my time on savings, anything I can save. So for me, savings is no longer important, but it was. It's how I made my first million. It's how I made my second. It's how I built what I have today. Frugality was the foundation of that, right? Like I saved everything. And because I invested astutely, every dollar I saved then is worth 10 now, right? In some cases, every dollar I saved is worth 20 and 30 in some of the investments I made, right? So that's why some people say, oh, it's just a $1,000 trip. Oh, it's just $5,000. I got a $5,000 nicer car, whatever. Like I'm not gonna be driving a Honda Civic. I need like, the Plus model, whatever. And they spend $10,000. But that $10,000 invested when I was 19 in property versus buying a car or something. That 10 grand now has become a couple $100,000, probably $250,000 today. That's huge, right? Those small little amounts you spend turn into huge amounts of money over the long term. So, watch the pennies, watch the dollars. Once you're making the big dollars, forget the pennies and the dollars. Focus on how to grow those faster and how to make more income. Hopefully that can help. Thank you everyone for watching both streams. I know the first stream cut off there. I don't know what happened. The Wi-Fi was horrible in the hotel here. But here we are. And appreciate y'all tuning in every week for the last, 4 years now? We've been going live for more than 4 years. But yeah, thank you everyone for watching. If I missed your comment, I'm sorry. I did as much as I could here. I gotta check on my daughter. Thank you for watching, and we'll see you next week. I'm live every week, 7 to 8 p.m. Save your questions, bring them then for the live chat. If you're watching the replay, smash that thumbs up. If you're watching this right now, you're one of the 4 people who are watching this, or 50 people that are watching this, hit that thumbs up right now. It'll help the engagement. I don't charge anything, and I have ads turned off. I could put ads on right now where you click the stream and you get like 4 ads while we're talking right now. I get a penny every time an ad plays when I have monetization turned on. I can make lots of pennies off you guys. I can make it lots of bucks too, probably $1,000 a month if I wanted to, but I don't. Give it to you guys for free because that's small money. It doesn't matter to me. I'm trying to give back. This is my way to give back. So if you can give back, just smash that thumbs up, share this video on your social media, or pick one of my better videos, if you didn't like this one, whatever, and share it with a friend. Say, hey man, like, check this guy out. He's teaching personal finance, or you know what I mean? Like, just share it around. That's why I'm trying to do it, is to get the message out there, help change lives. So thank you so much for watching, everyone, and we'll see you next week.